Good day, madam. I'm Shiva and my group member is Leedya Shiva. In next slide, please. Okay. In this assignment, we choose this company because Aeon has set up itself as a leading chain of general merchandise stores and supermarkets. It has set up in response to the Malaysian government's invitation to Aeon Japan to assist modernize the retailing industries in Malaysia. Aeon's steady interior renovation of stores to project a photograph design to meet the ever-converting wishes and desires of clients is obvious evidence of this. The reason we chose Pakson Group was because it has unveiled its long-term plan to improve its value proportion based on lifestyle elements, which include fashion, beauty, gifts, food and beverage, government supermarket, and edutainment. Pakson Holding Berhad is an Asian-based department store operator with an extensive network. Next slide, please. From the graph, we can see that let's have the single asset of share price. From the graph, we can see that the highest share price of Aeon was in the middle of 2019, and the worst share price was in November 2020. In comparison with the Pakson Holdings, the trend of this company was quite same with Aeon. The Pakson has the highest share price in the early 2019, and the lowest is at the March 2020. The outperforming in the middle of 2019 was caused by Hari Raya festive season sales, and it has continued until end of October 2019. As we already know, the decline in early 2020 up to October 2020 caused by the COVID-19 pandemic. Both companies struggled a lot during the COVID-19 pandemic. Moving on to the next slide, arithmetic mean. Based on the figure above, we can see the average return of Aeon is 0.0002, while Pakson is 0.0012. During 2020, both these companies were seriously impacted by the pandemic and resulted a decreased profit margin. Not only them, but all the companies in the same industry felt the same experience. People tend to save money and used money for their importance. Therefore, retailing industry cannot earn more profit due to the shortage demand by people. Moving on to the standard deviation. From the figure above, we can see that Aeon has a standard deviation value of 0.0211, while Pakson has a standard deviation value of 0.0597. This indicates Aeon has the lowest standard deviation and less unstable in long run. Investors who are risk opposed should invest in Aeon. In comparison, Pakson has a higher standard deviation value compared to Aeon. This implies that Pakson Holdings Berhad has a non-stable share price movement compared to Aeon. Investors who are risk takers can invest in this company to generate more income. Moving on to the coefficient variation. From this figure, we can see that both companies have a positive value of coefficient variation. However, Aeon has the biggest value of Pakson Holdings Berhad. From the point of view as an investor, the positive value means that investors suitable to invest in these two companies at this time. But investors still can invest in these two companies by looking at their financial ratios performance. Next slide, please. As for the expected return of portfolio, the graph shows Aeon and Pakson there's no negative expected return from the entire portfolio. If investors want to make investment, they should invest in a single asset portfolio. This is because the most suitable portfolio to be chosen is portfolio 1. Portfolio 1 was of 100% of Aeon's share. The expected return for the portfolio was 0.0231. As for the standard deviation portfolio for the both companies, we can see that there is an increasement in the portfolio. Portfolio 1 has a lower standard deviation and portfolio 11 has a higher standard deviation. Portfolio 1 has a standard deviation value of 2.1122, while portfolio 11 has a standard deviation value of 5.9694. This indicates that portfolio 1 has the lowest standard deviation and less unstable in the long run. Investors who are risk opposed should invest in portfolio 1. In comparison, portfolio 11 has a non-stable share price movement compared to portfolio 1. Investors who are risk takers can invest in the portfolio to generate more income. As for the capital asset pricing model, the value can be seen from portfolio 1 to portfolio 11. The highest value of CAPM is negative 3.967, while the lowest value is negative 2.520. This implies that a portfolio containing a higher weightage is less exposed to market risk. This is most likely due to the different industries that these companies operate. Moving on to the next slide. Economic analysis. Malaysia is Southeast Asia's fourth largest economy, and it has performed well in the recent years because to strong wild demand for electronics, growing demand for commodities like oil and gas, and improving labor market. However, the government's reduced spending as well as weaker public and private investments slowed economic growth to 4.3% in 2019. According to the IMF, most recent, the global economy would rebound strongly in 2020, reaching 6.5% before establishing at 6% in 2023. A political crisis, low oil and commodity export prices, and China's downturn have all significant impact on Malaysia's economy in recent years. On the country's finances, Malaysia has the region's highest debt burden, anticipated at 70.7% in GDP in 2021, with spending outcome GDP. The fiscal deficit was decreased to 1.8% in 2019 due to the higher oil prices and the government's earliest initiatives to minimize spending by lowering subsidies. The government has begun a fiscal reform program that included subsidy in order to achieve a balanced budget by 2020. And now I'll pass it to my group member, Leedya.
Thank you. Moving on to company analysis. As the first graph shows the return on sales for both companies. Return on sales measures how efficiently a company turns sales into profits. From the figure above, we can see that Aeon and Co Berhad has decreased in the year of 2020 and slightly increased in the year 2021. In the other hand, Pakistan Holding Berhad has drastically increased from the year 2019 until 2021. The next graph, which is on return on asset. The return on asset ratio is an important profitability ratio because it measures the efficiency with which the company is managing its investment in assets and using them to generate profit. It measures the amount of profit earned relative to the firm's level of investment in total assets. From the graph above, we can conclude that Aeon and Co. Berhad had decreased from the year 2019 to the year 2021. As for Pakistan Holding Berhad has increased from the year 2019 to 2020 and slightly decreased in the year 2021. The third graph, which is current ratio. The current ratio is a liquidity ratio that measures a company's ability to pay short-term obligations or those due within 1 year. It tells investors and analysts how a company can maximize the current assets on its balance sheet to satisfy its current debt and other payable. Comparing all the 3 years from 2019 to 2021, Pakistan Holding Berhad holds a higher liquidity ratio than Aeon and Co. Berhad. Aeon ratio can be seen fluctuating and dropped from 0.3605 to 0.1818 in the year of 2020, and there are no big changes in the year 2021. Next slide. Moving on to the net working capital, company needs sufficient amount of working capital to pay for the additional inventory and staff that will be needed during the high demand season. Based on the findings, we can see that Pakistan Holding Berhad has a positive for net working capital. The trend for Pakistan Holding Berhad is to keep on increasing, while Aeon Co. Berhad, in other hand, it can be seen that the value has dropped drastically to negative for all the 3 years. This means Pakistan Holding Berhad is more stable compared to Aeon and Co. Next is total asset turnover. The asset turnover ratio measures the value of a company's sales or revenues relative to the value of its asset. The asset turnover ratio can be used as an indicator of the efficiency with which a company is using its asset to generate revenue. In the calculated 3 years, Pakistan Holding Berhad has the highest asset turnover value at 1.8151 during the year 2021. Meanwhile, Aeon has the highest recording of 0.6943 during the year 2019. Not only that, a drop in value was recorded for Aeon in the year of 2021, which is 0.6193. Next is receivable turnover. The accounts receivable turnover ratio is a measure in accounting that enables the business to quantify its ability to manage credit collection effectively. By holding trade receivables, we are extending interest-free loans to our customers. The ratio helps to analyze how well that we as a company will manage the following debt collection. On an average 3 years, Pakistan Holding Berhad has the better receivable turnover ratio compared to Aeon. The ratio has a direct link to collection from clients. The better collection generally equals a higher rate. Thus, Pakistan has done a better work compared to Aeon. Next is payable turnover. The account payable turnover ratio is a liquidity ratio that measures how quickly and how frequently account payable turnover occurs within a company. Accounts payable turnover is the number of times a company pays off its vendor debts within a certain time frame. Similar to most liquidity ratios, a high accounts payable turnover ratio is more desirable than a low account payable turnover ratio because it indicates that a company quickly pays its debt. From the figure above, we can see that both companies have decreased drastically. Next slide. Debt ratio is a solvency ratio that measures a firm's total liability as a percentage of its total assets. In other words, this shows how many assets the company must sell in order to pay off all its liabilities. Companies with higher levels of liabilities compared with assets are considered highly leveraged and riskier for lenders. From the data can be seen, we conclude that Aon and Co. has almost constant value for all 3 years compared to Pakistan, even though it decreased from the year 2020 to 2021. The value is still higher and it might be higher risk of leverage. Aon and Co. is in less risky situation. For equity ratio, the equity ratio measures the amount of leverage that a business employs. It does so by comparing the total investment in assets to the total amount of equity. If the outcome of the calculation is high, this implies that management has minimized the use of debt to fund its asset requirements, which represents a conservative way to run the entity. Conversely, a low ratio indicates a large amount of debt was used to pay for the assets. From the data, we can concluded that Aon and Co. Berhad is staying constant for all 3 years. Same goes to Pakistan Holding Berhad. It stays constant, but it's higher than Aon. Therefore, there is high chance of investment and trust among investors and creditors for both companies. Debt equity ratio. The debt equity ratio is a measure of relative contribution of creditors and shareholders or owners in the capital employed in business. Simply stated, ratio of the total long-term debt and equity capital in the business is called the debt equity ratio. A low debt to equity ratio indicates a lower amount of financing by debt via lenders versus funding through equity via shareholders. A higher ratio indicates that the company is getting more of its financing by borrowing money, which subjects the company to potential risk if debt levels are too high. From the results that we have gotten, Pakistan has higher debt equity ratio in the year 2020 and Aon has higher debt equity ratio in the year 2019, which means they have higher chances of bankruptcy if it's the business face hard times. Next slide. Okay. To conclude, investors are advised to invest in single asset rather than portfolio. During the recovery phases, both companies are making their strategies to stay compete in their industry. We recommend that risk-averse investors should choose portfolio one, which is 100% contains Aon shares, as this investment is the best option from our studies. We also recommend that risk-taker investors should choose portfolio 11, which is 100% contains Pakistan shares, as this investment is the best option from the studies too. Based on our studies, Aon and Pakistan are slowly recovered from the serious impact of the pandemic. Financial ratios analysis proves that Aon has an excellent performance on profitability, liquidity, and efficiency ratio than Pakistan during the last 3 years of analysis. That's all. Thank you.
Okay, what do you think if I want to invest in short term? Which company should I invest? Either in single investment or portfolio?
Repeat, madam. Sorry, I didn't hear.
What is your opinion, your recommendation if I want to invest in short term investment? Either in single investment or portfolio?
Single investment.
Single investment, madam.
For Which company?
Padini, madam. Sorry, Padini pula. Aeon. I'll go for Aeon.
Okay, thank you.
Thank you.